Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, this webinar is being filmed on April 18th for trading April 19th. That's Monday, 2010. Traders, I'm going to tell you about a couple of things right here. Of course, before I get to the board, I have to give you my disclaimers. So this is what they are. Traders, futures trading is risky and can cause substantial financial loss, as we know. And trading is not suitable for all trading accounts, so if you're not ready to play this game, don't put your money into it. But for you traders that are ready to rock and roll, baby, let's see what's on the board. The euro still appears ready for another drop. We gave this to you on Thursday night for Friday, and the euro did have a nice drop. It still appears ready for another. So Sunday night into Monday, Tuesday, I think the euro just continues to go lower, and it is in a bear flag, and I will show that to you. The dollar index in a very strong bull flag, and I will show you that. Traders, I will also say this many, many times, hopefully in this video, and many times over the next couple of days at my site, but I would not, and I repeat, not fall in love with the downside in the indices this week. Traders, we've been going up like gangbusters. You hear some news about Goldman Sachs, the market pulls back, big deal. That is not going to stop the bull. Do not fall in love with the downside. Maybe we'll get a day or two down. We had one on Friday. Maybe we'll get one Monday. I would not be expecting this thing to crash. I would be buying the dips. So you sidestep it for a day or two, and when it starts to get buoyant, you buy it again. If you're the type that wants to sell into this, make sure you get your stops in, because I am not selling a bull market. I am waiting for pullback so I can get long. If there's a day trade scalp that sets up for a quick short and pull out, maybe we'll do that. But barring that, traders, I am avoiding the sell signals in the indices, and I'm taking the buy signals. And I'll show you that in my analysis in the chart segment in a moment. But the euro certainly appears to be ready to continue lower. And again, I'm going to say, do not fall in love with the downside in the S&P. Traders, let me show you some charts so I can show you what I'm talking about. Okay, traders, the first chart I'm showing you is the Dow Jones Transportation Average. And again, you will hear me say this, I would not fall in love with the downside this week. Traders, for a long time now, we've been in this very smart ascending parallel trend, right? Well, we broke out over it almost to a parabolic move. We had a one-day down day on Friday. If we came down one more day and hit this, watch this. Not only is this major support down here, but if you connect the lows, you will see that if we come down to that spot, you will hit two very major support levels right there. And I kid you not, that's going to be enough to propel us right back up. So you have a very strong market that is taking a little breather. It'll come back into the support area, and then you go long, or at least check your indicators, check your formations, and see if this turns out to be a buy area. I think it will be. We'll find out very shortly. I'm thinking by Monday, Tuesday, we'll be there and we'll know. So there is your transportation average. We know that this is the leader of U.S. indices, and if I wouldn't fall with the downside of the leader, I'm not going to fall in love with the downside of the follower either. Let's take a look at another chart here. Okay, traders, another one of the world leaders and certainly the U.S. indice leaders is the Russell 2000. The Russell 2000 has been in this wonderful parallel channel. It had a down day. Another down day puts it right into the channel, and then likelihood is some form of support starts to take place. Even if it goes a little lower, I love the market. I think this is a very strong bull. Again, I would not fall in love with the downside of U.S. indices this week. But there's more, so let's look. Traders, another one of our leaders, the June NASDAQ daily bar. Again, I will repeat, I would not fall in love with the downside of this chart because two good down days brings you into support. And you know we have our two-day rule, right? Two big down days in a bull market and you become a buyer. Two big up days in a bear market, you become a seller. This is a bull market, that's been a big down day. We get one more down day, you become a buyer. That's the way the two-day rule works. If the two-day rule comes into effect at this support line, boy, oh boy, would I be interested to see what happens there. So keep your eyes on the support. Do not fall in love with the downside. You see what the leaders look like on the dailies, right? Now I'm going to step this out a little bit. I'm going to show you something a little further out. We'll see what you think of that. Okay, traders, we were looking at the daily in the indices. Now we are looking at the weekly. Actually, this is the monthly. I went past the weeklies because they've already gone past OTAPMA. This is a monthly bar chart of the Dow Jones Industrial Average. Just got above last month of our OTAPMA, or Omni Trading Academy's proprietary moving average. And it has held well and opened up another month up here. So you have 2 bars above OTAPMA. Very bullish long term on the monthly. If you watched the video I did for you just about a week ago, I showed you the daily, the weekly, and the monthly with OTAPMA. And I said the daily and the weekly is well above OTAPMA. Let's wait for the monthly. And the monthly is now above it as well. Very strong if you ask me. So a couple of down days, fine. Let the market have a couple of down days and get ready to look to buy it somewhere. That's the monthly on the Dow Jones Industrial Average, one of the followers. Let's look at one more follower in the monthly fashion, and that would be the ES. Okay, traders, the next one is the follower. This is the E-mini S&P on a monthly bar chart, and as you can see, the monthly is above OTAPMA now. Here's OTAPMA. Monthly's up here. So the monthly in the ES is above OTAPMA. The monthly in the industrial average is above OTAPMA. And in all the leaders, the transportation average, the Russell, the NASDAQ, they are all well above the OTAPMA on their monthlies. Now the followers are above. I say that's long-term bullish. You buy the dips. Let this little down move that we had on Friday, if it wants to continue on Monday, look for a spot to go long before this is over. All right, traders, so now you've seen the indices. Let's go look at the euro and the dollar index. Okay, traders, you've all heard of the 3 little pigs, right? We huff and puff and blow your house down. Well, what do we have here? The 3 little flags. And they are going to huff and puff and blow the euro currency down because that's what bear flags do. They force markets to go lower. Bear flag, look at the drop that ensues after that one. Bear flag gives us a big enough drop to call it a flagpole for a 3rd bear flag, and we are down here now just below the flag, and I say very bearish for euro currency. So the euro currency has a bearish formation, 3 in a row. They are called bear flags, and now I want to show you what the stochastic, or one of the indicators on the euro currency looks like. Okay, traders, we're looking at the euro currency. This is an indicator called slow stochastics on the daily bar of euro currency. Sell signal. Why? We've gotten up to the area when normally we've gone too high, and it has turned and started to head down, and now %K and %D have crossed, and that is a bearish signal. And if you pull any of the major indicators that are out there that are wrapped around the euro, you will find them bearish. Euro bearish formation, euro bearish indicators, the euro is bearish. Let's look at dollar index now. Okay, traders, the euro had bear flags. The dollar index, what kind of flags are those, guys?
Bull flag.
You both in agreement? How about you, Greg? What do you think?
Yes.
Bull flag, right? All right, well, if the euro had a bear flag, 3 of them in a row, the dollar index has 2 bull flags, rest assured that that's a bullish signal when the euro had the bearish signal. Rally up, bull flag, rally up, bull flag, rally up is the next thing that should happen. Dollar index looks really strong here. Traders, let's look now at the stochastic on the dollar index. Okay, traders, staying with the dollar index daily bar, slow stochastics have gone down, come back up. They've gone down below the 20 mark, have come back up, and %K and %D have crossed right here. Very bullish look in the indicators wrapped around dollar index. At the same time, when you look at the euro, you have a bearish look. Dollar index, bullish look. I like what I see. Then, of course, the euro in a bear flag and the dollar index in a bull flag. And when you have action like that, this is bullish, that's bearish. The indicators are the same way. So if you ask me, euro's bearish, dollars are bullish. That's the way you want to play the currency, dollar versus euro. Okay, traders, I have one last chart I'd like to show you, and that is the bond chart. Okay, traders, the U.S. 30-year T-bonds, the June daily bar chart, has had a little bit of a rally, has stayed inside of this blue parallel channel. But when you look at a larger picture, it's actually inside of a huge apex. Narrowing, and at some point it's going to break, and we think it will be to the downside based on all the analysis that we've done. We feel the UST bonds are in a topping pattern. They are just about finished with their top, and if you run into resistance right here tomorrow, and that's not very high, it's like the 117.10 to 20 area. If you run into that resistance and stop cold, this thing will break back down. So here is a very interesting spot because not only does it meet the major resistance here, it meets the top of the channel right here. They both come together. If you ask me, traders, that is a market that's giving sell signals, but we will stand aside for one day and allow it to test up there and see what happens. Now, I told you there's only one chart left, but I think I want to show you the stochastics on the bonds as well. So let's look at that. Okay, traders, here we go. One last chart. And this time, I swear to you, it's the last chart. All right. This is the 30-year T-bond slow stochastic on the daily. I just showed you the chart, so it looks like the T-bonds maybe need one more day up. What would that do for its stochastic? If it went one more day up, stochastics would end up about here and probably start to hook above the 80 mark as they almost always do. Here, here, here. Didn't even get that high here. And we are up there now. You get one more day up in bonds, and this is what you get out of it, and then the downside will come our way. So the stochastic absolutely agrees right now with the bonds maybe having one more day up and then running into that resistance area. Traders, do your own homework. Absolutely pull the charts on the indices and take a look at those. Do not fall in love with the downside of U.S. indices. Look at your bull flags in the dollar index. Look at your bear flags in the euro. And then take a look at the topping pattern or the topping action we see in the bonds. So, traders, you've seen those charts. You see my technical argument here. Again, do not fall in love with the downside in the indices because you'll regret it. I can't see this as a crack. I see this as a slight pullback, giving us a chance to get back in and take the train even higher. Okay, traders, so again, now that you've seen the charts, pretty impressive bear flags in the euro and bull flags in the dollar, right? Undoubtedly, that's what we have going on there with bearish indicators in euro, bullish indicators in dollar, agreeing with their formation. So you got to love that. Then you have, oh, I didn't put the bonds on the board, did I? I thought I wrote 4. Then you have the bonds with that nice topping pattern and the fact that you have that resistance I showed you from the top coming down and then the channel resistance meeting in the same spot. And if the market hits that, I think that's a sell area. So we'll take a look at that. We'll watch it closely, but we need to follow the bonds in the thought pattern that it is going to break this year and end up much, much lower by the year end. So I am stalking the bonds. I am looking for a spot to get in, and I will get us in that trade sooner or later. We've been in a few of them, but we're going to get into a long-term bond trade shortly, and we're going to hold that one. So you be ready for that. All right, traders. So you got the charts down. Go do all your homework that you can. It's Sunday night. You got plenty of time to get the homework done before the markets are in full swing Monday morning. So make sure that you do that. Traders, as you know, a stop is your best friend. Never, ever trade without stops. The most, or the worst, I should say, horror stories I have ever heard in this industry, and I worked on the trading floor for 20 years, more than that. I've been in this industry. I've been all over the world visiting traders, all over this world visiting traders. The horror stories always have come from the traders who say they traded without stops. Don't think you're quick enough to get out. Put your stops in so that they knock you out if you have a bad trade on. All right, traders, not much else I'm going to do in this video. It's Sunday night. It's the beginning of the week. We got a long way to go and a lot of videos coming at you. By the way, speaking of which, this is video 574, baby. Yeah. Yeah, right? I'm just going to keep on sending them your way. I hope they're helping you. All right, traders, give me a call anytime day or night, 702-629-4755. Please come on down to our site. It's www.livewithoscar.com. Jump into our free chat rooms and allow us to teach you how to do analysis like the brand I just showed you on the board behind me. All right, traders, keep your emotions out of trading. One of the best things you can do is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Sub-Sarin. Emotions are out. Yeah, thanks, guys. All right. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.